Hi there, welcome to Kneppy Invest and welcome to another technical analysis update. A bit of a shortened video today, so I'm going to have to keep this fairly brief. I should start my timer because sometimes if I don't time my videos, I just ramble on. Anyway, what I usually do in these technical update videos is I go through the indices, commodities, Bitcoin, bonds, have a few companies' charts I want to show you. But I am going to be a little bit more selective in today's video. So I won't go through every single indice. I'll go through two indices. I will look at the XSO, Nasdaq, also have a look at a few commodities. And I'm thinking at this point in time, I might have a look at, can't even remember what to have a look at when it comes to commodities. Definitely have a look at the 30-year bonds because I think right now, I'm calling it that we have seen a shift in trend in the 30-year bonds or even the bond market. And that could be a good sign moving forward. So, and then we'll have a look at a few individual companies' charts. I have all right here. So Kogan, IGO, Intertech Pivot. I'm not going to show you Intertech Pivot, Superloop. And I'm also going to show you Droneshield because I did notice someone complained. In one of my technical update videos, I did not show you Droneshield. I think it was my companies at a 3-month high. I did not show a Droneshield chart. And this person said, well, you sold out of Droneshield. That's why you're not showing the Droneshield chart. I'm a shareholder of Droneshield. That's not the reason I didn't show it. I can't show you every single company that is at a 3-month high. So I was being a little bit selective. Come on now, silly people. I'm a Droneshield shareholder. Yes, I did trade Droneshield and I took profits. But I'm still a shareholder. I bought back in. You can do that. When you sell out of a company, you can buy back in. It's a thing you can do. Some investors don't realize that. Some investors think when you sell out of a company, that's it. You have to completely sell out of that company for life. And that's pretty silly. Anyway, so let's start off with looking and comparing the XSO, the small cap ordinaries in Australia, versus the Nasdaq. And there's a reason why I want to compare these two indices. And that'll become apparent in a second. So let's start off with the XSO. And I am a little bit bearish about this one. And I have put this line here, this line at 7,800, around that anyway. So that's a very important level for the XSO. It really struggled to get about that level back in February. You can see it just below that level for about a month, maybe even more than a month. And then it went through that level on the 29th of February on strength, up 1% on that day, and kept on rallying to a longer term high at the end of March. Has really struggled since then. And whenever it gets down to about 7,000 or 2,900, that level is 2,980, by the way. Whenever it gets to that over the past 3 months, it's pulled higher. So it really struggled to get below that level. But during the week, the XSO fell below 2,980. It fell below that level on a Tuesday. On that particular day, the XSO was down almost 2%. And has stayed below it the next 3 trading days. So potential breakdown below this support level, which means it might be coming a resistance level. And this is starting to look a little bit more bearish. So a little bit more bearish when it comes to small caps on the ASX. But can't say the same thing when we talk about the Nasdaq, the complete opposite. So in the past week, the small caps or small ordinaries fell 2.16%. How much do you think the Nasdaq rose or fell? Now, if you said any negative number, you are completely wrong. If you said a positive number that was less than 2%, you're wrong as well. I'm thinking 3%. Yes, I can't believe I don't know this one yet. 3.47%. It was a little bit more than I thought. I was going to say 3%. It rose this week. And I thought, oh, that's a little bit too much. So the Nasdaq up 3.47%. So just compare this chart, this weekly chart, to the XSO. So where is all the money heading towards? It's heading towards the big companies in America, the technology companies in America, the Nvidias, the Alphabets, the Microsofts, the Apples. Those are the companies that everyone wants to invest in right now for obvious reasons. Now, whether you have this argument that those companies are overvalued, that's a whole completely different story. But this chart, this Nasdaq chart looks absolutely stunning. Beautiful looking chart. And even if you have a look at the Dow Jones had a down week. I think it was down like 2%. I shouldn't be showing you the Dow Jones, so I just want to see how much it fell. maybe not 2%, 0.54%. So it was a little bit more negative than actually what happened. In fact, the Russell 2000 was down. Well, Russell 2000 wasn't down all that much either, 1%. So Russell 2000, Dow Jones, both down, but the Nasdaq up 3.5%. And this chart looks absolutely amazing. I think even if you look at the daily chart, geez, there was one down day during the week. No, there was not. There was not one down day during the week. Up every single day during the week. We struggled on the Australian market. It just shows you the difference between the Australian markets and the American markets. And one of the reasons why I have started to invest more and more in the American markets, because that's where the best quality companies in the world are located, on the Nasdaq and the New York Stock Exchange. Okay, so that's the differences between the small caps. Now, you still can find quality companies in the small caps. And when I say quality companies, I mean companies that have the potential to become quite high quality in the future, but you do have to pick and choose a little bit more. On the Nasdaq, particularly towards the top of the Nasdaq, just full to the brim of high quality, powerful companies that are going to grow significantly over the next 10 years. Okay, that's all I'm going to talk about when it comes to indices. Now, commodities. I haven't figured which commodities I want to show you. So gold haven't done much. Iron ore, uranium. Uranium's had a nice bounce during the week. Went down below $84 at one point. Oil. Let's have a look at oil. Oh, oil's had a nice little rally the last 2 weeks. This is the daily chart. When it's low, it's about $73 not that long ago, and is now back up to $78.44. But when you look at the daily chart for oil, there's no trend. There's a bit of volatility in there, but there's no trend. And I think that's probably even true for the weekly chart. Yeah, no trend in the weekly chart, just going sideways. I would say, even if you look at the longer term weekly chart, there's short periods of time when there is a trend. We saw that between 2014 and 16. Oil was in a definite downtrend during that period, and definitely an uptrend from the depths of the COVID-19 financial panic through to the middle of 2022. There was definitely an uptrend period, but other than that, not much trend when it comes to oil. Copper had a bad week. What else? Coal bad. Is that it? Oh, yes, let's have a look at copper. Okay, copper. This is interesting. I noticed this the other day. So if you notice a beautiful trend in copper, and so when copper was in this uptrend, you'll notice that the big days, the big up days weren't that much. So copper up 1.4%, up 2.2%, up 2.5%. Then you also had these small down days, down 2.4%, but no massive movements. So you might say 2% up or down in one day is pretty big, but compare that to what we're seeing with copper over the past few months, then no, those days were not big. But just before we got to the top in copper, we saw these really big up days. And I'm wondering if that's just fear of missing out. People are seeing the copper price moving up, and they're just fearful that they're going to miss the fun, and so they just had to buy. I don't know. This is very similar to companies. Sometimes you'll see when the share price accelerates upwards, that's just fear of missing out crowd getting in late to the party. So I'm just thinking that's maybe what happened with copper. So up 2.2% on the 13th of May, 2.7% on the 14th of May, and also 3.6%. The best day copper has seen on the 17th of May, and that was just around the top in the market. And then the price of copper went sideways the next few days, up a little bit, but too doji. If you look at the one-day candlesticks for copper, these are, perfect doji candlesticks, which is telling us that there's indecision in the market. The bears and bulls are fighting each other. No one really knows which way to go. And then copper had that really big down day on the 22nd of May. That was sort of the sign that maybe the uptrend was coming to an end, because down 5% is quite rare. And that was the sign of a little bit more volatility, increase in volatility in copper. And we have seen further big down days after that, and a few big up days as well, but primarily big down days. So, and the price of copper keeps on falling. So it's gone from $3.15 or $5.15 down to below $4.50. Now, it does not mean the uptrend in copper has come to an end. This could be just a little bit of a blip, But I'm just concerned about the increase in volatility and these really big down days in copper. I'd want a bit of a smoother down ride. That makes sense. Now, the other thing is we have seen a decrease in volume. That's actually a good sign. So this could be the bottom. And I would love to see a little bit of bounce in copper moving forward. But I'm not convinced that will happen. And what else? I think that's all I'm going to show you in regards to commodities. Now let's have a look at bonds, because this is where I do think there is a shift in trend. So this is a 30-year government bonds, United States 30-year government bonds. And now the Australian 10 years is similar to this, but not quite. In fact, there's less of a trend in that particular bond than this one. There's more trendy. This is more trendy. Not in terms of people more willing to buy, but in terms of trends, there's more trends in the 30-year. Now, I would have said definitely the 30-year government bond yields was in an uptrend from late December all the way through to recently, a few weeks ago. In fact, I'd say the uptrend came to a completion, possibly came to completion on the 4th of June. And I think that was confirmed in the last few days. 4 down days in a row when it comes to bonds. 30-year bonds. So why do I think this is a change or shift in trend? It's fairly obvious, I think. So the definition of an uptrend is higher highs, higher lows. Because you're always going to see it, because nothing goes up in a straight line. You see it's sort of like a wave-like pattern, but the wave-like pattern is going higher. The peaks and the troughs are higher, each one. So higher highs, higher lows. So in terms of a shift in trend, what we're looking for is, instead of higher highs, lower highs and lower lows. And we've seen 2 lower highs in a row. So this is the first high. So we need to see this high, 26th of April. We need to see the next high higher than that. The next high was lower on the 29th of May. And then the next high was lower than that on the 11th of June. So 2 lower highs in a row. So what about the lows? So you can see in the uptrend, all these lows are higher than the previous lows. That's the definition of an uptrend. We had 1, 2, 3, 4 higher lows. Now, this is the most recent, not the most recent low, but this is the low 3 days ago, 3 times ago, 3 whatever. Anyway, so we want to see this low not beaten, not getting any lower. The next low not lower than this low. God, I'm just rambling on now. So we want to see the next low not lower than that low. We want to see it higher to confirm it's still an uptrend. But look, the low we saw on the 6th of June was lower than this. And now, whatever low we get now is going to be lower than the one we saw on the 6th of June. So we will see 2 lower lows. So lower highs, lower lows. This is now moving into a down trend. So there's going to be some people happy about this. Yes, there will be some people happy about this. But you know what could happen? Some surprising higher than expected inflation rates. Bond yields will go on a tear. So bond yields will be highly influenced by any surprising inflation numbers over the next few months, without doubt. Okay, let's have a look at some individual companies' charts. Starting with Kogan. Kogan has been in a big downtrend. Share price has halved in the last 3 months. Yes, halved in the last 3 months, including a day when the share price fell 27% on the 24th of April. So obviously that was a trading update. I can't sort of remember that. 27th of April, almost 2 months ago. And was that really 24th of April, sorry, 24th of April. Kogan, April 2024 business update. Obviously, it was negative. Don't even have to open it up to know it was negative. Share price kept on falling after that. But look where the share price is right now. There's a little purple box. Hopefully, the right colors are showing up. That purple box is a support zone. The reason it's a support zone, we can see these lows back in October last year and also January of this year. That was the lows. Those were the lows. That's a support zone. Possibly we can even extend it further, or maybe not. Extend it further, yeah. Even if we extend it further to in time, back into earlier 2023, that was an area where the share price struggled to get through. So a support zone. So right now, the share price of Kogan is in a support zone. And not only that, share price was falling, fell into the zone, and we have seen the share price rally as it moved into the zone. And right now, it's just above the top of that zone. Now, the top of the zone could be it is subjective. So I could have that lower or higher, but we have seen support now come in for Kogan's share price after the share price falling a fair bit, halved in about 3 months. IGO, this is a really important, or it shows cases the importance of support and even resistance levels. So there was a support level for this company just below $7. And we can see, I think the support level had this support level all the way back to 2020. So just prior to COVID-19, that was a high share price high for this company. So that's why I've got it. And I just kept it in there forever. And we saw the share price bounce off that level back in January. And you can see the share price of IGO struggling to get below that level. So it was straddling this level quite a while back in January and February, hit that level again in March, got close to again in April, got to this level back on the 5th of June, and we saw no bounce. And then on the 11th of June, share price fell through that level. The next 3 days, down she goes. So that just showcases the importance of support levels. And when support levels are broken, the share price could drop a fair bit in a short period of time, because all those who are willing to buy at the support level, because it's support level, are saying now, well, I'm not going to buy now because the share price might fall a fair bit. In fact, the share price has fallen all the way from $6 and what's the support level? We'll say support level was $6.90, $6.90 to $6 in 4 trading days. So, yeah, so an ugly looking chart for IGO. On the flip side, Superloop. I'm a shareholder of this company, so just be warned. But this is a beautiful looking chart. So there's me taking a position. I have taken profits, but I do have a longer term position in this longer term trading position. Now this is just a beautiful performing chart, well behaved chart, a beautiful behaved technical chart. So share price rallied significantly. Share price then went sideways. As soon as the share price met this short-term moving average channel, we started to see share price go higher. And every single time the share price moved into this range, this zone, the yellow shaded area, we saw the share price rally. It's done about 5 times. So whenever the share price moves into this zone, was a good buying opportunity. I knew that, and I was going to add to my position in this company. I just didn't hit the buy button. Don't know why. Just didn't hit the buy button. And then for some reason, the share price in this company has rallied in the past week. Was that up 11%, I think? Up 11.55%, and the weekly chart looks absolutely great as well. So there's no reason there was never a reason for me to take profits in this company, but I'm just thankful that I did not completely set out of my position in Superloop. So beautiful looking chart. And Droneshield, someone complaining that in my technical analysis, when I looked at companies at 3-month high, I did not show Droneshield. And the reason I didn't show Droneshield is because I sold out of this company. And I'm sorry to inform that person, I did not sell out. Well, technically I sold out and then I bought back in almost immediately, a few days later. So way back here, somewhere, when was it? I forget exactly when. Sometime in March, I bought back in and my holding in this company has doubled. So why am I complaining? And look at the chart. Look at the chart. There's nothing to say about this chart that you can't see for yourself. So look at the price action, look at the volume, look at that massive increase in volume. So everything is going right for this company. Valuation, $1 billion. Geez, $1 billion. Okay, so yeah, that's Droneshield. And one thing I'm going to do right now is I'm going to look, I haven't done this yet. I'm going to look at companies at a 3-month high. And one way to judge your trading portfolio, one of the ways I am judging my trading portfolio is the amount of companies that pop up onto the 3-month high scan or screen. So Coles, no, I don't own Coles. That's a 3-month high. I do own Pro Medicus, but that's a longer term hold, 3-month high. GQG, I'm trading this 3-month high. CSR, no, because this has been taken over, so it won't be long. Hub, this is a mistake from me. I took profits, and I should have, because share price hasn't even looked like it's going to come out of an uptrend, and it's at a 3-month high. In fact, it's at even longer than a 3-month high. ABC's been taken out. So let's move on to Kogan. This company, I believe, someone did mention in one of my videos that there was a broker upgrade for Kogan. That's why the share price rallied on Thursday, which is insane for me. Just because a broker upgraded, why would you buy on the basis of that? It's just absurd. This is another trade that I made, took some profits, and I probably shouldn't have. So I'm learning from my mistakes. This was a mistake. Selling out of Kogan and Hub 24 a little bit too early when I should have. There's no reason. So Kogan at a 3-month high. Chewer or Chewers, I am trading this 3-month high. For some reason, the share price of this company has rallied in the past week, just like Superloop. I don't know why. Let's have a look at the weekly chart. Rallied 10.25%. I don't know why. I don't care. This is a trading position. 3-month high. Regis Healthcare. This is an interesting one. I've not even thought about taking a position in this company, but if you look at the chart, why not? Why have I not thought about taking a position in this company? It's a nice looking chart. I think the reason is I just have this bias against this company as a really low quality healthcare company. Droneshield. I've just mentioned Droneshield. Superloop. Mentioned Superloop. Or a Bander. So out of all the gold companies, this one seems to be doing the best. This is a beautiful looking chart. It's been on my watch list ever since November last year. Broke out at about 18 cents, and now it's doubled. Why did I not take a position back then? I don't know. Paragon Care, another company on my watch list, and I'm thinking, why have I not taken a position in this company? It's a beautiful developing chart. McMahon, another company, beautiful trend developing. Integral Diagnostics, I'm not sure if this company's popped up recently. No. So it's very close to breaking out. Integral Diagnostics. So this is a company that has just popped onto my radar, and this is the reason why. So if we start to see the share price get above $2.60, that would be a good move forward for this company. Botanics has been popping up on my radar for a while, and this is why. Look at that beautiful chart for Botanics. Genex Power has been taken over. Austin Engineering, beautiful looking chart for this company. Again, this popped up on my radar back in January at about $34. Now it's $57. No, 34 cents. Now it's 57 cents. Demerix, been showing you this chart for a while now. Beautiful looking chart. So this is, by the way, this is listed by market cap. So we're going down as we go down, smaller and smaller companies. Empire Energy. This has just popped up on my radar. Not sure why. Energy, yeah. But look at it, the chart. Definitely shift in sentiment and trend. Aroa Biosurgery. This is probably one where I think it's a little bit too early. We saw a similar rally back in December last year, so this reminds me of that. I need to see a little bit more strength, and I don't see the volume coming in. So that's one company that I just don't have interest right now trading. Retail Food Group, no interest in this chart either. Plenty, maybe. Aspire Mining. So we're now getting to $121 million market. This chart looks pretty good as well. So a lot of opportunities here. Now we're getting to a market cap. There's a bit of a gap between Aspire and Sports Entertainment Group, coming in a market cap of 69 million. I have no interest in that. Prosper, I'm pretty sure this company's been taken over. Titan Minerals, starting to look interesting, this one, isn't it? Starting to look interesting. Cryosite, well, yeah, that's low liquidity, definitely this company, so you have to deal with that. And now we're below a market cap of 50 million. So we've got a company called, I won't go through all these, companies called Equinox, FAR, Resoro Strategic, which is just listed on the ASX, Triangle Energy, Sintara, Nuriza, Red Sky, Farmex, Volt Resources. Now we're getting to market cap below 20 million. Advanced Braking Technology. I'm just going to have a look at this one. It's been an uptrend for a while, hasn't it? Volatile Energy, Aquarian, Grand Gulf Energy, Zoll, and then we keep on going on. Down she goes. There's a lot of other companies here, very small company. So this is what I do every single, or at the end of every single trading day. I go through the companies at a 3-month high. So you get a different list, but you'll see the same companies popping up time and time again because that makes sense. If a company is in an uptrend, it should keep getting to a 3-month high every so often. I think that's a great way to trade, is just looking for these companies that are continually getting to 3-month highs. Anyhow, that's all I've got for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.